Investors, today I have 5 dividend stocks for you to add to your watch list immediately as the stock market wavers in fear from debt ceiling talks and the future economic projections. Now, on the other hand, you may have noticed I'm in a pretty barren studio here, and that's because I'm moving, but not to worry because I hope to be back up and running in the next couple of days for next Sunday. Now, if you're new here, the heck with the personal news. I'm Ari, a dividend investor here on YouTube, helping to keep investors learning about economic insights and discovering new stock ideas. And just before we dive in today for those 5 dividend stocks, I only ask for your help in tapping on the thumbs up button to help me with the YouTube algo, and of course subscribe if you want more videos just like this one. Now with that said, let's dive right in. So for those of you who have been following my personal journey, on the most positive note, my account just jumped to $113,160.32. And while your account may have also popped to new highs this past week, I'm here to be a bit more of a realist and sharing with you not to be surprised should more volatility hit. I know I certainly will not be, and I'm sharing this with you not to scare you, but simply just keep you as a realist in looking at economic data sets and well into the future. Now, speaking of more macros, let's chuck all the negative news headlines of this debt ceiling talk out, because that's really more of a political issue than it is an economical one. And in my opinion, of course, it's just making for scarier headlines as we've seen this whole last week.
In approximately 2 weeks, our country will hit its debt ceiling. House Republicans understand that this would be disastrous for our already fragile economy.
Tonight, deadlock over the debt ceiling as we get closer to a major deadline. Republicans say they are not confident a deal can be reached before the nation defaults.
2 weeks to go until the U.S. may not be able to pay its bills, something that could ignite an economic catastrophe.
However, the more important news is on all the economic data sets, like the most recent April consumer sales report, which came in weaker than expected, or all the Federal Reserve speakers who have not been so bullish or optimistic on the near-term future. Now, as I have been mentioning video to video, because we're still living in an environment of high inflation, which is now at 4.9%, coupled with a terminal interest rate of 5%, both companies and consumers will remain stressed, and the question is how long can they last, or moreover, will they prevail? Because let's face it, not all businesses nor consumers are created equal. And at the end of the day, amidst all of this mayhem, we still have to realize there's just plenty of opportunity, and right now especially, which of course leads us to our very first dividend stock of the day, which is Home Depot, ticker symbol HD. Now, I'm assuming you know Home Depot because it's the most dominant home improvement retailer within the United States and Canada, with over 2,300 stores across North America. But I'll get right to it here, because you may be thinking, why on earth is Home Depot a buy after they just reported the worst revenue miss in about 20 years? Not only is that a great question, but it's a valid one. And here's why I'm saying macros matter all the time, because of course, during these economic conditions, consumers are pinched and spending less, especially on the home improvement project front. Now, additionally, construction overall is down as home builder costs remain elevated, which means Home Depot's share price should be down, and what do you know? It is trading way off its peak of $337 per share at $282 per share, which is roughly a 20% change. And with a PE ratio coming in at 17.2, I would say it's a steal for a longer term investor. Because let's face it, there will eventually be an economic turnaround, whereas the do-it-yourselfers are going to be back to DIY projects, and home builders will once again commence to start building new homes, which is why we still see analysts remaining very bullish on Home Depot, with the share price rising to $333.42 per share. That's over 18% worth of upside, and it's also a joy to see just how many hedge funds have been pouring millions of dollars into Home Depot as well, likely for the longer term. But that's not it, because of course, shareholders ultimately get to enjoy Home Depot's dividend, coming in at a dividend yield of 2.71%. Up next, let's shift gears a bit here and discuss United Parcel Service, or better known by their ticker UPS. Given it's one of the largest and most trusted global shipping and logistics companies worldwide, that ultimately wavers when consumers lose confidence and economic uncertainties come about, like now, which is why we're certainly seeing their share price falling down off the peak on the year from $193 per share to $171 per share as of this video. That creates about a 12.8% opportunity for us here, with a PE ratio hovering at 13.6. Now, with UPS being the $143 billion market capitalized leader it is, an investor need not worry much here, but rather wait for an economic turnaround and a bull market run, because as of right now, analysts remain very optimistic, with the share price rising all the way back up to $194.86, which is a little over 13% worth of upside. And smart money is also taking all the opportunity in the world here to invest into UPS. As it's beaten down, we see hedge fund activity just increasing, trending upwards. But let's not forget now about UPS's dividend, coming in at a dividend yield of 3.36%. As for dividend stock number 3, it may be one you're initially going to want to put back into the pasture given their recent earnings report miss. But let's talk about Tyson Foods, ticker symbol TSN, because Tyson is literally the second largest meat processor worldwide, which speaks volumes to their reliability. But it's even more important for you as an investor to take note of the fact that if you decide to beef up your portfolio with Tyson, at times it may feel like a bit of a roller coaster ride when it comes to their share price. Why? Well, largely because Tyson and similar stocks are impacted by a wide array of economic factors and conditions. To paint a bit of a picture here, just within the last 12 months, the cost to ship products, any products, including meat, has become exponentially higher. But so too has the cost of feed for animals, and at the same time, consumers are really penny pinching. So no wonder we're seeing Tyson missing on their earnings, which transpires into a sinking share price, down over 20% year to date, trading for $50 per share, with a PE ratio right now coming in at just 11.6. Now, in more exciting news, we also see some insider activity occurring, which is always a good indicator of the future direction of a company. And not only that, but hedge funds have come around to seeing more of the longer term picture here when it comes to Tyson, with plenty of them building up new positions or adding to their positions. And until we truly see an economic recovery, shareholders like myself will continue to collect on a strong dividend yield coming in at 3.81%. All right, now dividend stock number 4, Newmont Corporation, ticker symbol NEM, which is an American gold mining company. And a matter of fact, it's the world's largest gold mining company, owning gold mines throughout Nevada, Colorado, Ontario, Quebec, Mexico, Dominican Republic, Australia, Ghana, Argentina, and Peru. So talk about a worldwide footprint. There you have it with Newmont. And as of this video, what a gold find to snag up Newmont, with its share price down from its peak this year of $54, roughly $44 per share, which equates to about a 20% change. But let's look to the macros here to understand costs and margins, and ultimately recognize that Newmont has been severely impacted by the economic conditions, whereas inflation played a major role, but so too did overall sales being way down, ensuring earnings misses, and investors just backing out of Newmont. Now, with hedge funds doing the exact opposite, and moreover analysts forecasting the longer term upside here, with the share price rising to $60.40 per share, which is over 34% worth of upside. Now, I'm loving this add to any investor's watch list, especially with a dividend yield as high as Newmont's, coming in at 4.47%. And last but not least, investors, let's dive into the financial sector for an investment that I have continuously been mentioning. Meaning it's time to listen up, because this one has plenty of firepower, and I want to talk about T. Rowe Price, ticker symbol TROW. It's a global investment management firm that has remained an industry leader through the thick and thin of all the economic conditions since 1937. But the unfortunate reality when it comes to T. Rowe Price is that investors don't dive into where most of T. Rowe Price's assets are tied up in, because if they did, they would see that T. Rowe Price has plenty of assets within the NASDAQ. And with the tech stocks just having taken a major beating, so too has T. Rowe Price's share price, coming in at $105 per share, where it was once up at a peak here of $127 not too long ago. And with a PE ratio coming in at 17.3, T. Rowe Price is looking better and better for the longer term investors, which I believe is why we see plenty of hedge funds loading up on this financial industry leader. But until we actually get a bull run, all shareholders will just be able to do is enjoy that 4.54% dividend yield. And there you have it, investors, the 5 dividend stocks that I think are worth an add to your watch list this week, from Home Depot to UPS, Tyson, Newmont, and T. Rowe Price. Now let me know your thoughts on any or all of these dividend stocks, whether or not you either have them in your portfolio or you're thinking about investing into them. Drop all those comments for me down below. And don't forget to tap on that thumbs up button if you found today's video to be of any value whatsoever. Now also remember, if you're looking for new economic insights and stock ideas on a weekly basis, this is the channel for you, so join me here by subscribing. Now with that said, investors, I not only look forward to having you join me in my next studio, but of course in the next video, so I will see you all there.